Hello traders, it's Samurai Trader here. Welcome to session 97, how to day trade any market, the $1,000 a day challenge. If you're a young gun, $1,000 a day may not be enough for you. That is where you simply increase your position size. However, at the same time, never forgetting our money management rules. Now, what I teach in these sessions, if you're new to my channel or new to my YouTube videos, you can apply to futures, forex, or stocks. Now, in today's session, we're going to be looking at a different market. So normally I'd be looking at the NQ or trading the NQ. I used to call the NQ the nasty Nas, the nasty Nasdaq, because it can be very flighty at times. However, I've attempted to reframe it to the nifty Nas, change my mindset a wee bit. However, at times it is very whippy and fast, and there are some other really good alternatives, such as the Russell and or the Dow. Both of those, as is the NQ, are $5 a tick. Now, unlike the Nasdaq, which is $20 a point, and there are 5 ticks to a point, with the Russell and the YM, it's a straight $5 a tick or $5 a point. Now, you still get some really good daily moves, but those markets are a lot slower. You just don't get quite the trading range. Now, the volume is also a lot lower, but I'm going to show you this in a moment, because I'm also going to be showing you how to day trade these markets. Now, today I've also got something special I'm doing. That is, I'm going to be reviewing the trades I took on what we call the overlay chart. And the overlay chart really is a game changer for new or struggling traders, because it can really help you greatly in identifying scalping and day trading opportunities all on the one screen. So rather than having multiple screens open, say looking at anchor charts on other screens, you can focus on the one screen. But I'm going to show you that more of that in a moment, so stick around, because towards the end of the session we will be going to the charts themselves, where I'll be walking you through step by step exactly what I'm looking for. Now, let's start with the disclaimer. Traders, we do know there's a risk in trading. Don't trade with money that you can't afford to lose. Apparently, I'm told I really should be saying you won't always. I've been day trading now for 28 years, so I don't expect to be achieving my results overnight. In fact, I'm quite often asked by traders, how long should I be allowing to really pick up the setups and to be really trading profitably? Traders, I'm going to tell you something that most traders won't tell you, or most educators. It's really going to take you 90 to 180 days. If you're not prepared for that, day trading is probably not going to work for you. This is not a get rich scheme. It's a get rich slowly business. That is, you can get very wealthy day trading. However, you've got to give yourself some time. It's not rocket science, but you've got to learn the patterns. But moving right along, now you will see that I use a number of indicators. Now, you've got pure price action traders out there, but if you're a new or a struggling trader, indicators can certainly give you that head start, because they're a great confirmation tool. And you've also got, as you'll see today, there are indicators that are predictive indicators. That is, they certainly increase the probabilities of a successful trade, because so many traders trade them. But more on that when we get to those. So I mentioned here that we're going to be looking at the overlay chart. Now, the overlay chart simply is where I've taken a number of indicators with my custom settings from what I call the anchor chart 1, and I've overlaid them in a separate window on my trading chart. Now, in this particular case, this is a 3-tick Russell. Now, with the Russell and Dow, I'm jumping ahead there. I've got that down there. You can also trade the micro, but here you can see that we've got my trigger line from my anchor chart trending down, and so we really want to take any trade in the direction of that trigger line. However, at the same time, we need to be aware of, like down here, see those lines there? We've got the current day's low, current day's open, and yesterday's close. all of these levels become what we call price magnets or predictive points. What you can be doing, and this is my 1-to-1 indicator here, and you can see the white paint bar, that's my super scalper. So you've got a couple of different type of entry points that you could be taking. Now we look at the NQ. I'd be trading a 5-tick NQ. Now let me say this before any experienced trader here says, oh, you can't trade that during the New York session. You're absolutely correct. You've got to dramatically increase the time frame. Now I love teaching traders how to trade the Globex session and the New York session, but when you're trading the New York session, you're going to be trading a much higher time frame. However, if you get home from work at 6 p.m. Eastern, we've now got what we call the Globex session, which opens. There's some fantastic trading opportunities right through to the next day. So the market closes at 5 p.m. Eastern Standard Time. Reset the computers and it reopens. Yes, you've got lower volume, however these are very tradable, and what it also does, traders, it gives you more thinking time. But if you were, say, trading during New York, you'd be up there, you'd have a 12-tick NQ plus. It's really pumping. In fact, I call particularly the open of the New York session the killing field. So you've got to be very, very careful. But after hours, there's some great trading opportunities. Now look at my trigger line here. I'm in an uptrend. That for members that are watching this is a 2B just there. That is a 2B. You can see there on the way down we've got a slingshot. That would have been a great I would say probably a 2D as well. Now when we get to the charts, you'll see more of these than exactly what I mean by that, traders. But traders, this is about making money. Now just so you know, I call these steps. Now these are Renko bricks. Now when I say I've got a 5-tick NQ or a 3-tick, that means from the high to the low of each of these bricks, that's 5 ticks, or in this case $25. However, where you got these steps just here, each step then is worth 2 ticks. I won't get right into it now, is worth $10. It's perhaps I'll explain more if I remember when we get to the live charts, but a bit beyond today's video. But one thing, easy to learn once you have it explained. All right, very, very quick advertisement. If you haven't already downloaded my ebook, The Truth About Day Trading, please go to the link below. Now you will also see me display, and I may as well quickly just flash it up here, my compound sheet, which I'll explain as we get closer. You can also click the description link down below and get hold of this, as well as a little training video I've recorded how to use that. Make sure you subscribe to my channel and give me a big thumbs up, please, which keeps me motivated in producing these. All right, and 1 minute and we'll be through the advertisement. Now if you like what you see, which if you don't, there's I don't know what to say to you, is that these trading strategies work. Traders, if it was something better, I'd show you. In other words, for those that know me and have seen my library and whatever, I've been day trading for 28 years now. I've invested literally hundreds of thousands of dollars into research, development, trading systems, strategies. Now you may be sitting back and thinking, well, what does that mean to me? Well, it means a hell of a lot, because if there's an indicator that works, I would tell you about it. And that is, as Gand famously said, there's nothing new under the sun. And virtually every single indicator out there is what we call a derivative of price. So seriously, traders, there's very little out there, and I can show you some fantastic indicators that are free and you can create on any trading platform. Now bottom line is, for $197 you get all of my indicators, over 200 hours of online videos, is over 35 PowerPoints, as my members say. My Google Drive and the new members area, we've got a new members area about to launch, is an absolute gold mine. You get the works for only $197. Now on top of that, I have a special offer where for 7 or 8 years now I've been running a live trading room and also a coaching room. Now with my coaching room, which is really designed for traders that are new to my system, or traders that are struggling, or even experienced traders that want to learn my setups, I give you 1 month free access to my live coaching room. So every Tuesday and Wednesday evening, 6 to 8 p.m. I run US time. I run live coaching sessions. They are recorded if you can't attend, so you're basically getting 16 hours of private group coaching. There's comprehensive downloadable handouts. Traders, there's nothing else out there like this, and that's all included for your first month. Now after month 1, if you want to continue, you drop me an email and say, Ray, I'd like to continue with this. Now email me directly, because on my website it's $297 a month for the coaching, but you can gain access at $97. So in the description link below, you can join. Traders, let's now get into this. Now first of all, most of you that see my videos, I talk about the income potential of day trading, but I also talk about having realistic targets. Why? As you gain confidence, you're also gaining competence, and it makes trading so much easier. So rather than having an unrealistic goal of earning 20% per day on your money, let's consider earning only $100 a day per contract. So I would state, for the majority of a population globally, $5,000 a week would be a game changer. How do you achieve that? Trade 10 contracts at only $100 a day. Now you're going to see with the setups on the screen here how I do that and how you can do that. As you gain experience, you can target your $300 to $500 a day per contract. Now if you're a young gun, certainly you might want to be trading 20 or 30 contracts, but if you're an old dog like me, 5 to 10 contracts are mighty fine. You can have a fantastic income and you're not tied to your computer all day every day. So you've got those sort of scalpers like myself. I really want to get in, get out and wrap it up. But then you'll have others that are perhaps happier trading maybe a longer time frame. But this is the true potential, as you're going to see. Now in today's example, I'm going to be trading, well actually I've already traded it, but you're going to be seeing the 10 trades I took on the Russell. Now the Russell is $5 per tick. Okay, so here a target of $100 per contract. Now all of that was over and done with within 10 minutes. Now this is rather a challenging area, because you'll see on the charts, this is what I call a double divergence. I had a great 2D up here. Then I had it for members watching, I had a T20-1. However, I went for a larger target. That's right, I stayed in that one. That's right, I was waiting for an exit at the pivot. But there was another reason, and if I forget to bring it up, and this is for members that are watching this, you would see here on the anchor chart 1, the 89 EMA was down here. So I was targeting not only the pivot but the 89 EMA. So I then added to my position. Now this came up within 1 tick of stopping me out, and this is where, when I do enter a trade, I like to have my stop 1 tick above, 1 tick above, or 1 tick below, 1 tick above, 1 tick below. That generally works really well. But I want you to also notice here, excluding the divergence trade here, look at my trigger line on the way down, and look at my short-term hook here. Okay, and you'll see this more in a moment, just how powerful this really is. In other words, if you're scalping like here, is it in the direction of the trigger line? Now here it's black, I'm looking for shorts. Here it's white, I'm looking for longs, and the short-term trigger line also confirms the trade. Now when you know exactly how these work, so many experienced traders will go, why didn't I think of that? It's just so straightforward, and it's just a pattern that sets up but kicks butt. Now moving on here, I try to keep my videos to 30 minutes. Look, we might go 40 minutes. We'll just see how we go here. And you know, my marketing manager says, Ray, keep your videos to 10-15 minutes, but how can I get the information to you that you need to know to make an informed decision on whether day trading is for you or whether what I teach is really worthwhile. So that's why I go the extra time. So here, if we look at this, is here are the markets that I'm interested in each and every day. So the YM, the Dow here, this is a fairly typical day. It'd be 120 to 150,000 contracts would trade a day, so we've got plenty of volume. And same on the Russell. Okay, and I tend to find the Russell is a calmer market, and you've got a good 20-25% greater volume in any given day. Now here I talk about trading these markets, and realistically you need between $2,000 and $3,000 to trade the Russell or the YM. Don't be conned by, and actually I won't say con, but where your broker says you only have a day trading margin of $500 or $300 or whatever it is, well, that just doesn't work, because if you have a loss of $40 or $50 per contract, you're losing 5-6% of your account. So the reality is, to day trade correctly, you need to have between $2,000 and $3,000. Now the beautiful part is you can start on the micro where you only need $200 to $300, and I'll show you the effects of starting there and building and how quickly you can get here. The shame of it is, though, most traders don't want to hear this. They want to get rich quick, but they never do. They wonder why they keep blowing their account. But within 12 weeks you're now up to trading these markets with the proper account size. So you can start with a small account, and even if you've got a large account, why not cut your teeth here on the mini account, on the micros, and build. Now over here, if you're trading the NQ, realistically you need 3.5 to 4,000. Why? Because of the volatility. The tick value is the same. All of these three down here, sorry, are $5 a tick. These are 50 cents a tick, but you've got much greater volatility. So let's look at a realistic trading plan, because I'm going to be showing you how to trade these markets. So let's talk about realistic targets. Okay, so here, if you've got a goal, okay, people with goals succeed because they know where they're going. But I'm not going to take too long on this. Now for members that watch my videos all the time, this is based upon the Russell and the Dow, so it's a bit different, so stick around and listen to what I have to say here. Now first of all, let's just say here you might have $2,500, $5,000, $10,000, $20,000, but what if we kick you off? Sorry, that was my air conditioner, that beep was turning off. Let's just say here we start you off on you start with a $300 account. Now you only need $250 with what I'm about to show you. However, on the micro, let's just assume you fluff up a few trades, etc. Now what it also means that if you have a 10 tick stop loss plus a commission, you're only going to lose around $6.50. Okay, now we go for $15 a day, which is 30 ticks a day. Okay, within 11 weeks your account size is now 2,700, and you're now ready to roll over to the big contract. And for those that are not familiar with my spreadsheet, which you can download, here we're only increasing our contracts each time we double our money. So here we need 600 to go to 2, we need 900 to go to 3. This is how you do it. This is the correct way of trading. Okay, so we're using the market's money. Now what you might find is, if you've got the funds available after 10 weeks, you beauty, I've got this down pat, I really know what I'm doing, you might then jump straight to 1 or 2 major contracts. But don't rush it. The market's going to be here next week, next month, next year. Now once we've got those funds there, 2,700, we now roll over to the big contract where we can have a little less. Well, 10% of the value will be 3,000, but we can drop that down a wee bit, down to 2,500, and based upon here 150 a day, what that means is here within 12 weeks I've got the potential there of earning my 12 grand a week, and my account size is 49,000. Now here that's based upon 150 a day, which is 30 ticks a day. Now What if you only went for 20 ticks a day? You're being really conservative. You say you might be an older gentleman or lady, and you think, well, you know what, I just want to get in there and just really get in, get out, wrap it up for the day. Trading the way that I teach you, 2,500 a day, you can see where you are in 19 weeks if you started off with 2,500. That's not a bad daily income. Now, I do have to say this. Now, this is trading 23 lots. When you trade 23 contracts, you've got no problem at all after hours with 10 lots. 23, you're going to get some slippage, etc. at times. So it's, if you're trading during New York, that's a walk in the park. So if you're a 10 lot trader, and if you're going for your 150 200 a day, beauty, there's your 2,000 a day, 1,500 to 2,000. But I just want to be really straight with you there, that the greater, like here, trading 100 lots, yep, you got an income which is fantastic, 50,000 a week, but you realistically are going to be doing that during the New York hours. Hope that doesn't complicate what I'm trying to explain here. I just want you to understand how to really day trade here. Now we go from 20 ticks a day up to 30. Now we're really starting to cook it. We're really starting to cook with gas. Okay, so here 12 weeks, 12,000 a week, we're up to 50,000. And for the serious traders that want to really put the time and effort in, that is to be trading maybe 3 hours a day. I'm being conservative with the time input. I know what some experienced traders are going to say. If you say this, you haven't been listening to me. 200 in the New York session, you can do that in half an hour. Yes, however, you're not going to get away and be able to trade a 3-tick Renko that time of day. So leading up to probably around 7 8 a.m. Eastern, yes, you can just get away with it then, but you're going to have to increase the time frame. However, if you're trading a couple of hours in the evening or early in the morning, look where you are in 8 weeks. Okay, the sort of income. This, traders, is the true potential. So if you're going for your 150 a day, which is an extremely realistic target, you start off with 300, allowing a wee bit more for micros, okay, based on 1,500 a day. Now remember, the micros are 10% of the value. 11 weeks, we're going to jump up and then we go to 150 a day, which is 10 times that, which is the big contract. It's taken us 23 weeks to get to a potential income thereof, and I've got to say potential legally, 10,000 a week. It's taken you 23 weeks. This is the true potential of day trading. So this is why it's critical you approach it professionally and correctly from day one. Now what you'll also see me trade, and when I say trade, using my trading, is anchor charts. An anchor chart is a higher time frame. The reason we use that is anchor charts is exactly here. An anchor chart will basically is and let me just, without getting too complicated here, the markets are fractal in nature, meaning it's like a snowflake. If you were to put a snowflake under a microscope, you'd see that there's patterns within patterns within patterns. The pattern you see on an entry chart will appear on an anchor chart, the exact type of pattern, just in a higher time frame. So this is called a T12, and so we get T12s on the entry chart, but you get them on your anchor charts as well, just in a larger version. But if you see the market like your entry chart, and for members watching this is also a T3 of course, but if you see a big overshoot like this, what do I do here? Look at our anchor chart. We've got a T12 set up. Are we going to take this every day of the week? So we use anchor charts. If you like, the anchor charts are the tide. Our entry charts are the waves. So as I get to the charts in one moment, there are some critical things that we need to consider each and every day, and we need to be checking as we trade, because sometimes these levels are just off screen. Now we don't have time in this video for me to break each of these down, but once you attend my training and you understand these are really straightforward. Within half an hour on each of these, wow, I understand. See, a lot of these are, as I mentioned, most indicators are predicated upon price action, already plotting. These are predictive indicators. Why? Because so many of us trade into these levels. We know that they become a self-fulfilling prophecy. So we've got pivot levels, the prior day's open, high, low, and close levels, the 89 and 200 EMAs, especially on your anchor chart. It's very powerful. Intraday swing highs and lows. That is, as the market breathes in and out, those swings will quite often become targets. And the current day's open, high, and low, particularly the high and low. So let's get to the charts and let me walk you through a few things here. So a little further along, we're going to come across these trades that I took, only 3 of them. Here, hit my target, that's it, thank you very much. What we can see here is a 3-tick Renko. Now at times it'll pick up. Now here, this is, in other words, the market will increase its speed. So over here, that was at 1:28 a.m. right through to 1:41. So this sort of, what's that, just say 15 minutes of price action. Now here, when we get a pullback like this, do I take this trade? If you're using the overlay chart, see the trigger line, the black line here, we're looking for shorts in the direction of that. Okay, so here for members watching this is a T20-1. We're going to trade in the direction of that, thank you very much. Over here we do get a bit of a hook above that, and you can see here my trigger line down here. I'm not going to give you all my little trade secrets, exactly how these 2 lines work. I'm going to give you most, but there's a couple of things that kick butt, and they just work brilliantly, and every trader in my opinion needs them. But anyway, members, you know what these are. So let's have a look at the anchor chart, but I am going to share with you still some incredibly valuable information, as I do in every video. Look at this just there. See here on your entry chart, you've shot past here your 200, your 89, that's a pivot there. Look over on your anchor chart 1. What have you got just there? That's a T12. We're bouncing off the anchor chart 200 EMA. Let's just go along a little further. Bang, I've got another one. You can see here, traders, that we have sideways price action, but yet on the high time frame we still have a fantastic downtrend. That is, the 200 is trending down. T12s are a very high probability trade. So let's keep going along. So we come along here. Now what do we now do? We're now breaking out of this trading range. Now one of the most challenging things for a trader is, when do you know? And by the way, these down here with T12s back in the opposite direction, little harder to trade, because when you've got both your 89 and EMA sideways, as you do here on your anchor chart, you know, which one, what do we do? It's called a trading range. Yes, you can trade ranges, but much more difficult. Now getting back over here, when you're in a range like this, how do we know when we've broken out of a range? Well, the footprints to a trend are when we make higher highs and higher lows, or lower lows and lower highs. Now what I've done here is I've now made a slightly higher high. Let's see if we get a trade entry here. Now just there, so just there we've got our first trade entry. Now it's identified here by my 121 and a couple of candles along here. You would have had then my white paint bar, that's the super scalper. So we've got 2 entry signals right there in the direction of a higher time frame. Thank you very much. Now remember before, traders, I said to net 150 a day you need 30 ticks. Each one of these little steps here, and you may be wondering why that gap. It's because of the overlay chart. Okay, you won't see that on a normal entry chart. It's because I've overlaid. I've got 2 time frames running. And one thing I failed to say, look at my short-term trigger line and look at the long-term and my long-term stochastic on the higher time frame. They're screaming, take this trade, take this trade. Now back on this, each one of these little steps here is worth $5. Okay, so there, you know, what have you could actually wrap up, that's a good 25 ticks there. But I do have to tell you this, I'm a scalper. I work on a fixed target personally. Okay, so I like to get in, get out, get paid. You won't see me trail too often. I'll go for a larger target if I'm buying into a pivot. Like up there's a cam pivot, and this is our traditional pivot just there, the PP. So you'll see me extend my targets and maybe go for 10 ticks in those moves, but I don't generally rarely will I actually trail right up here. But I've now got another trade entry right here. I've got both my 121 and see the white paint bar. I've got another trade entry. Now just with that there, these I'm just hypotheticals. You'll see the live trades I took in the moment. Here, where would my stop loss go? One tick below. Okay, so one tick below. Away we go. Now just one thing I want to mention, I don't know if you've noticed here, and let me just show you this down here. If you want to be conservative, we can see over here that my long-term trigger line is up, but the short-term hasn't hooked yet. Now that's about to hook now. So that means effectively, if I want to be conservative, now I have an entry. Now for this, and I mentioned, and let me just pull this up here, you can trade this market here with I'm using a 3-tick Renko. Okay, but here we look at the margin requirements, and these are the things where we drill down and really look at our trading plan. How much do we really need to be allowing to do this correctly? Well, that's what this is all about. So if you're trading say with a where are we, you're using a, let's just say an 8-tick stop in total, which you can do with this, you need a $2,000 account. Now ideally you want to be allowing for a 10-tick stop, means you need 2,500. It doesn't show you that. That's what you ideally need if you're trading either the 6A, the Aussie currency futures, which is $5 a tick, the RTY, or the Dow. So I've got all these tools that also that my members have and actively use. Now our stop loss is under here. Now I believe you should be allowing up to a 10-tick stop. Here you can get away with an 8-tick stop in basically all of these setups. Here you could have easily got away with an 8-tick stop. For members watching that, you're entering on a buy stop or a sell stop using the super scalper only. You're ignoring the anchor chart 1 candle. Okay, so if you want to enter using the super scalper, you can get away with a $2,000 account, which means you'll get there a lot quicker than the figures I've been showing you. Now one thing I want to point out here, remember I mentioned there about the intraday swings. Where are the intraday swings? Well, quite often look at this. Now we can see here we've come down here. Here is a close swing. They can make great targets. Now we come down here within, we were at 3 ticks within being stopped here. Now if you hadn't entered that trade using the super scalper, you've now got another trade entry right there. Thank you very much. If you're after your 10 ticks, $50 a move, okay, you still would have been in that one. Now we've achieved it. Now as we're trending up here, I now have what we call a 2B. Sorry, a 2D, my apologies. I've now got a great 2D just here, and this is one of the live trades. So let's now look at the anchor chart. Why did I take that trade? Well, it's hard for you to tell. This is called a zero lag MACD. So you can set up a zero lag on any MACD. If you've got TradeStation on NinjaTrader, I've already got this coded. If you've got a standard MACD, I give you the settings. You can model this virtually exactly with a standard MACD. But what we've got here is a high in price and a lower high, and replicated also on my higher time frame. So I've got a formula that I've discovered that works really well just through trading experience, quite frankly. Nothing, you know, no brilliant mathematical equation there, but I've just found through experience just the ideal higher time frames to be using with your lower time frames. A simple formula that I use. But here this is called a 2D, great 2D, and down we go. Thank you very much. We're out at this target. Now down here we then pop up. I've got what do we have there? That was T20-1. I forget the exact setup I had there. So we had another trade entry. Now with this one, there's a T20-1. So that was the first setup after your T20. Now with this down here, traders, I actually should have really taken profits down here. Look on the right there. Can you see there how I'm bouncing off the anchor chart 189 EMA? I decided to stay with the trade. We then kicked up. It was within one tick of being stopped out. Okay, now let me just explain this. When you're selling or buying into major support or resistance areas, those areas are pivots, your 89 and 200 EMAs. Here's a pivot here. Look at the major EMA. Really, I recommend, and you'll see me usually take profits even if I'm not going to get my 8 ticks per move. Now's the time to get out. But what I had going for me was, look at the trigger lines here. Both the short term and the long term are thundering down here. And then I took a second entry here, which is also a 2B, based upon the short term, hooked back over. I stayed with the trade, and you can't see, but down here I was exited all of these contracts just down here. Traders, this is not rocket science. Everything I'm showing you here for 2Bs, for 2Ds, everything here, the 34Bs, these are all patterns. What you want to do as a brand new trader, you need to learn to trade in the direction of the overall trend. Now, how do you identify the trend? That's where your tools, your indicators can come very handy. Now at the same time, you'll get setups like this, as you saw, that will be out in what I call no man's land. What do we do here? You could see then on the higher time frames we had major EMA bounces. Once again, these are nothing more than patterns. We see them every single day. So traders, we've covered a lot of information in this session. Now, using the overlay charts. Now, if you're a member, go to the Google Drive in the members area. You'll find there I've got a folder there on how to, and some videos there on how to set up your overlay charts on your trading platform. Then the settings that I use. So go into the chart time frames, and there's also plenty of examples there of how to actually trade the overlay charts. Okay, so example, what exactly, and you'll see there's a lot more type on the screenshots there, exactly what we're looking for. But where this is a game changer, traders, it makes it so much easier for identifying entry chart entries, that is your entry chart in the direction of the higher time frame. It really makes it so much easier. So traders, we've covered a lot. Come and join me, become a member, come and join me in my classes, and I'll teach you how to trade these setups. I'll give you 1 month free in the coaching room. Then after that 1 month, if you wish to continue, there's no automatic sign up, by the way. I do that deliberately just so you know you're not committing, but you get all of my indicators. There's hundreds of hours of online instruction. Now, by the way, you don't have to watch all of those. Okay, what you do, it's what I call the Goldilocks rule when you first start day trading. You focus on only a couple of setups, which are the ones I've been showing you here, except for the divergence setups. You do not trade divergence when you first start day trading. Why? Divergence is harder to pick. what you've got is a ton of these every day. So why not simplify your trading, master trend trading to begin with, like there. Okay, all of these all in the direction of a trigger line. That one there is a deeper pullback, but overall we're in an uptrend. Look at that there, we're bouncing. You focus on that and you develop from there. So click on the link below, come and join me. Thank you, traders. This was session, was it 97? And I'll see you of course in the next session and in the coaching room. Thank you, traders.